What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Weeble is going to give you up to 12 free stocks. When you open a new Weeble brokerage account, put at least 1 penny in that account, they're going to give you up to 12 free stocks. So if you're interested in that offer, I want you guys to go down to the description box of the video. Click on that Weeble link, open up your new account, go get that free stock, go get that free money. I want to talk to you guys about 4 things today: our economy, cryptocurrency, housing market, and the stock market. Let's start with the economy. You guys know earlier last week, the CPI numbers came out, which basically measures inflation. And inflation right now is 8.3%. We really would like to have inflation at 2 to 2.5%. So we are a long ways off. But when those CPI numbers came out and we looked at the month over month inflation numbers, inflation is actually still increasing. So it threw the stock market into a sell-off mode. The only way our economy, guys, is going to get itself back on track is if we reduce inflation. And that's what the Federal Reserve is tasked to do. They will be meeting September 20th and the 21st, which is next week. And they are going to increase interest rates somewhere between 50 basis points and 100 basis points. By increasing short-term interest rates, it's going to make it harder for Americans to borrow money cheaply. It's also going to make it harder for Americans to continue spending money. And those are the 2 things we need to stop or slow down in order for inflation to come down. Now let's move on to cryptocurrency. Bitcoin and Ethereum. These are the 2 juggernauts when you're talking about cryptocurrency. Bitcoin last year, not even a year ago, guys, was trading at about $68,000 per coin. Fast forward less than 1 year later, it's trading around $20,000 per coin. What happened to Bitcoin? And Ethereum experienced the same decline in value as well over the same time period. So what's going on? In my opinion, guys, earlier this year, when we started having all these crypto lenders and crypto exchanges were filing for bankruptcy and basically going out of business, I think that really hurt cryptocurrency. See, only 1% of the market invests in cryptocurrency right now. So the 99% of the market doesn't even invest. Those are the people cryptocurrency needs in order for it to grow and become a long-term investment juggernaut. It needs that 99% of the market that's not invested in crypto. But it doesn't help the case of crypto when you have, like I said, large crypto lenders, large crypto exchanges ripping people off and filing for bankruptcy and basically going out of business. I think the only way crypto really gets back to where it used to be from a value standpoint is through regulation and oversight. See, that 99% of the market want that regulation and oversight. You got 1% of the market that says, nope, we love the decentralized, blah, 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 blah. But the 99% of the market is what cryptocurrency needs to be able to grow again. And unless the 99% of the market gets some type of government oversight, regulation, so we don't have these large crypto exchanges and these large crypto lenders taking people's crypto and then all of a sudden disappearing and filing bankruptcy. Unless you get some oversight and regulation, I don't see cryptocurrency getting to the level it used to be a year ago. I just don't see it, right? Now let's move on to the stock market. The stock market, guys, is volatile right now. We're in a bear market. It's trading at all-time lows right now, right? So when we're trading at all-time highs, we're typically in what we call a bull market because everybody's jumping in, everybody's investing. Your retail investors, your institutional investors, everybody's in the stock market buying shares of companies and buying and selling them. Right now, when we're in a bear market, large institutional investors are jumping in and out of the market based on what's going on in the economy. And retail investors typically will follow institutional investors. We look at the history of the stock market, it has its ebbs and flows, right? It has its down markets, bear markets, and it also has its up markets, which are bull markets. And it does that, and it has done that throughout its history. Right now, we're in a great opportunity, though, as retail investors who are looking to build wealth using the stock market. We're in a great position to be able to do that, even though the stock market is volatile. Because why? We can buy our favorite companies. We can buy our favorite ETFs while they're on sale. It's pretty simple, guys. If I can buy Apple at $148 a share when we're in this bear market, when we get back to a bull market in 2 to 3 years and Apple's trading at $200 a share, it's pretty simple math. If I bought it today at $148 and I can sell it tomorrow for $200, then there is where I make my net worth. Buy low, sell high. The key, though, to buying in this market is you got to be willing to hold it. You got to be willing to hold that investment for 2, 3, 5, 7, 10 years if you want to really build real wealth through the stock market. Most of us, 99% of us, can't jump in and out of the market picking and choosing and winning that way. 99% of us are not going to win by trying to be short-term traders or day traders. We're not going to win that battle, right? So let's get that out of our mind and let's think about long-term trading. And all that is dollar cost averaging in every single week, every single month to buying your favorite companies. Blue chip companies though, blue chip ETFs. And then just saying, I'm going to buy this today. I'm going to keep buying over the next 3 years. I'm just going to buy what I can afford to buy. And then I'm just going to hold it 3, 5, 7, 10 years. If you do that, history tells us you'll build your net worth, right? And you'll make some money. Now let's move on to the housing market. Prices in certain locations in the United States, home prices are still pretty high. And one of the reasons home prices are still pretty high is because we have low inventory. Let's use Southwest Florida where I live. We still have super low inventory for properties $500,000 and less. Practically no inventory in that price range. Properties $500,000 and up, we have a little bit more inventory. But still, those prices are not budging either. And the reason, like I said, they're not budging, guys, is because of low inventory. See, no large home developers or home builders are building what they call spec houses. And all that means is they just build out so many of these homes in their inventory. And then people will come in and buy those homes out of their inventory, right? That's a spec house. right? And large home builders in healthy economies will do that because they know they have the demand for them. Right now, demand is down, right? Even though home prices are staying pretty consistent because of low inventory, actually the demand for new homes is down. Why? Because long-term 30-year fixed rate interest rates are 6% now. And that means the average American cannot afford to buy a $460,000 house. And why do I use that number? Because that's the average cost of a home in the United States is $462,000. Problem is, with rates at 6% to try to buy one of those houses, most Americans can't afford it. And when I'm talking about most Americans, I'm really talking about middle class income earners, because that's really the population of people in the United States that carry this country on their back financially. So interest rates through the roof, right? 6%. A year ago, they were 3%. A lot more people could afford it. That's why demand was up, because rates were 3%. Typically, when interest rates go up by 1%, the demand to buy a home goes down by 11%. Applications for refinances is down by 83%. Why? 6% interest rates. People can't afford to refinance and take cash out because they can't afford the monthly mortgage payment. The housing market is not going to get better when it comes to demand until rates come down. And the only way rates are going to come down, believe it or not, is when inflation comes down. Drop me some comments, man, in the comment box and let me know what you think about what's going on with the economy, what's going on with cryptocurrency, what's going on with the stock market, and then what's going on with the housing market. If you want up to 12 free stocks from Weeble. And guys, Weeble is a self-directed brokerage app that I use every single day. I will never ask you to try something that I don't use myself. But they're going to give you up to 12 free stocks if you try their app. It's an app that's for free. They don't charge you any commissions for trades. They don't charge you monthly maintenance fees. So click on that link down in the description. Go get up to 12 free stocks. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.